Hello, this is the walkthrough video for WACC. In this problem, we'll be looking at how to calculate WACC given a balance sheet and an income statement, plus some other information on how the capital structure is for this company given its debt and debt components, as well as some market information for the equity. If you'd like to follow along with this problem, you can do so by downloading the Excel file. And you'll also find that the solutions for this problem are in the next tab over, so if you need those for future reference, you can do so. So to start out with this problem, I usually just start out with the market value, which is simply the share price times the number of shares outstanding. And you do this for both years. And then I go through and figure out the EPS, earnings per share. So it's simply the net income divided by your shares outstanding for that year. So make sure to reference the same year for each year and you'll come up with 6.57. And you can do the same thing. It's just the earnings. So net income divided by the shares outstanding, and then PE is price per earnings. So the shares price divided by the EPS ratio, and you do this for the other year as well, and then that section is done. Once you do that, you can come over to the market bonds equational stuff, and then we know the coupon rate because this is all information from over in this section. So we can go ahead and plug in all this information because it is given. So the years left is going to be the year that we're doing this is 2019 minus the year of issued. So there's 8 years left. So the numbers per year, so this is going to be simply your 8 years times the number of periods per year. So 2 bonds paid twice a year. So that's 16. The face value is always going to be $1,000 for reasons of simplicity. C is going to be, so make sure to put your parentheses, is going to be your face value times your coupon rate divided by your PYR, and then your present value, so per bond, is going to be we put a negative sign in front of there, so it's going to ask for your rate, so your market rate divided by 2 for 2 periods per year. Should reference that. Your NPR is already in terms of 2. Your payment. And then your face value for the future value, because it's going to be worth that $1,000 in the future. So you get 1,650. So we need the total number of bonds here. So to figure out total number of bonds, we got to go up to the number of bonds for this year. So it hasn't changed over the years. And we got to divide by 1,000. So there's 30,500 of them. So we got to times that by that. So our total market value of the bonds is 32 million, which is more than the book value. So this is good. That's kind of a check figure. So now we can calculate the cost of equity. So doing so, we got to reference the free rate plus the beta times the market minus the risk-free rate. and that should give us 19.42%. And the cost of debt is just our current yield, or YTM. So the value of our common for this year, so we're doing it for 2019, is going to be that 60,750,000. Our debt is going to be this debt portion of the bonds plus the mortgages, because it's all debt, so total debt. And to figure out the total, we just sum, and then we just need to calculate the weights. So obviously this divided by this is going to be 100, and the weight for here is just going to be the total divided by the common, and then this debt divided by the total, and that is complete. So to figure out WACC now, all we need to do is one calculation, so we can put it all together. And that is just going to be these weights times their opportunity cost. And then we add this one times the cost of debt. And then this time around, we got to put our tax portion in there. So it's 1 minus the tax rate, because we're adjusting for taxes, and it comes up with 13.49.
My name is Rick Haskell, and I'd like to thank you for watching this video as part of the Bill and Vieve Gore School of Business's Business Certificate Series. I'm a finance professor in the business school, where I'm also the director for the college's Center for Financial Wellness. The Business Certificate Series is offered through the Center as part of our outreach through the Gore School of Business. You can follow us on social media through Westminster's Instagram, YouTube, LinkedIn, or Facebook pages. You can use the QR codes provided or simply go to these websites. Thank you.